Leaders of 5 West African nations are set to meet President Donald Trump at the White House.
China's commitment to Africa was on full display in early 2025, when Foreign Minister Wang Yi embarked on a work visit to the continent.
And also international finance corporations and other bodies that were formed before even Africa became independent.
Who really dominates foreign investment in Africa? Contrary to popular belief, it's not China. In this video, we'll uncover the true powerhouse fueling Africa's growth, reveal unexpected investors, and explore how this shapes the continent's future. Get ready to challenge everything you thought you knew about Africa's economic landscape. Foreign investment in Africa. Foreign investment in Africa has surged dramatically, reaching record levels in recent years. In 2024, foreign direct investment, also known as FDI, in Africa jumped by 75% to an unprecedented $97 billion, marking a significant share of global flows. This investment growth stems partly from large-scale projects like urban development initiatives in Egypt, but also reflects broader economic reforms, liberalization, and enhanced facilitation efforts on the continent. Strategic sectors attracting attention include infrastructure, energy, mining, and telecommunications, which present promising opportunities for international investors due to Africa's abundant natural resources and expanding consumer markets. Moreover, policy shifts encouraging openness and streamlined investment procedures have played a vital role. The distribution of investments reveals varied growth across sub-regions, with North African countries leading the gains. This influx signals rising confidence in Africa's economic potential, promising increased job creation, technology transfer, and sustainable development if managed well. The dynamic landscape confirms Africa's emergence as a competitive destination for global capital.
And the relationship that they are building. Despite countries loaning money to continent of Africa borrowing money from international partners as investment and
perceptions of China's role in Africa. China is often assumed to be the dominant foreign investor in Africa, largely due to its extensive infrastructure projects and the Belt and Road Initiative, also known as BRI. However, this perception can be overstated or simplistic. Chinese investments are indeed significant, but remain concentrated in specific sectors like construction, manufacturing, and to some extent, renewable energy. Its approach often emphasizes large-scale infrastructure and social projects, supporting connectivity and industrial growth. While China's involvement in Africa recorded approximately $42 billion in foreign direct investment stock by 2020, European and American investors collectively still held larger shares of Africa's foreign capital during that period. Furthermore, China's diversification into pharmaceuticals and food processing represents a strategic shift to broaden its footprint beyond raw materials extraction and infrastructure. Understanding China's role requires nuance. It is a major partner, but not the sole or even largest investor, contrary to popular belief. Chinese investments are part of a complex mosaic of global economic partnerships shaping Africa's development trajectory.
China's presence in Africa has grown exponentially over the past 2 decades, transforming the continent's economic and geopolitical landscape.
Actual leading foreign investors in Africa. European countries collectively dominate the foreign investment landscape in Africa, surpassing China in total foreign direct investment stock. Investors from France, the UK, and other EU nations have long established commercial and political ties, reinforced by historical relationships. These investments span diversified sectors, including finance, telecommunications, mining, and energy. The United States ranks prominently as the second-largest investor, with its capital focusing heavily on technology, financial services, and energy sectors. American firms emphasize innovation, entrepreneurship, and partnerships that promote sustainable growth. Additionally, emerging economies like the United Arab Emirates and India have increased their stakes, expanding regional trade agreements and economic partnerships. The variety of sources highlights Africa's attractiveness as a global investment hub beyond the Chinese narrative. This multipolar investment landscape offers African countries options for capital, expertise, and market access, contributing to a more balanced economic development environment.
China's imports for the entire year of 2023 was over $3.13 trillion. In the Democratic Republic of Congo, DRC, the country is known to hold over 15% of global copper deposits and over 50% of cobalt reserves.
Historical evolution of foreign investment on the continent. Foreign investment in Africa has evolved significantly over decades, shaped by colonization, decolonization, and globalization processes. Initially, European colonial powers dominated investment flows, focusing on resource extraction and infrastructure to serve imperial interests. Post-independence, many African nations faced challenges due to limited domestic capital, political instability, and protectionist policies, which constrained foreign engagement. From the late 20th century, economic liberalization, structural adjustment programs, and regional integration efforts fostered a more favorable investment climate. The 21st century witnessed an expansion of global investors attracted by Africa's fast-growing economies, youthful populations, and market potential. Innovations in mobile technology and renewable energy became new drivers. Today, foreign investment is characterized by greater diversification, with a mix of Western, Asian, and Middle Eastern investors pursuing sectors beyond traditional mining to include urban development, digital economies, and services. This history reflects a gradual shift from colonial economic patterns to complex, mutually beneficial partnerships.
This sleek modern train connects major cities in Kenya. Funded largely by China, the Kenya Standard Gauge Railway began operations in 2017.
United States investment in Africa. The United States holds a significant position as a major foreign investor in Africa, ranking just behind European investors in total investment stock. American companies focus on diverse sectors like technology, finance, energy, and healthcare, emphasizing innovation and sustainable growth models. The U.S. government supports private capital flows through initiatives and partnerships that encourage responsible investment and economic development. This includes backing startups, infrastructure projects, and trade facilitation efforts aligned with long-term strategic interests. Recent years have seen increased American investments in renewable energy and digital technology, reflecting both global trends and Africa's unique opportunities. Moreover, U.S.-Africa trade agreements and multilateral cooperation frameworks facilitate these investments. This focus on diversified, high-impact sectors positions the U.S. as a key partner in Africa's economic transformation, prioritizing inclusive development and business ecosystem strengthening.
They are gathering for a two-day unprecedented mini-summit. The White House has offered few details, only citing commercial opportunities as the driving agenda.
France's economic presence and legacy. France's influence in Africa stems from a long colonial history that continues shaping economic ties today. The use of the CFA franc, a currency partially controlled by France, ties many francophones' African economies to the French treasury, limiting their monetary autonomy. French multinational corporations remain dominant in sectors such as mining, telecommunications, and energy, exerting substantial control over local markets. This enduring relationship has been criticized for perpetuating economic dependency and hindering sustainable development. Beyond direct investment, France maintains military bases and diplomatic engagement, reinforcing its strategic position. While formal colonial rule ended decades ago, France's neo-colonial economic practices, such as favoring French companies in trade agreements and controlling monetary policies, have sparked increasing resistance across Africa. Recent years have seen some countries pushing back, seeking greater sovereignty over their economies. Nonetheless, the legacy of French economic involvement is deeply embedded in the continent's infrastructure, governance, and financial institutions, reflecting a complex mix of influence, control, and cooperation.
And now, the empire is paying the price, and Paris panicking. But behind this financial freefall is a revolution the West never saw coming. A revolution led by young African leaders who have torn the colonial script to shreds.
The influence of the United Kingdom in African markets. The United Kingdom's legacy in Africa has engendered a distinct economic model characterized by relatively greater promotion of self-governance post-independence. British investment focuses largely on finance, extractive industries, and agribusiness across Anglophone countries such as Nigeria, Kenya, and Ghana. Unlike the economic dependency seen in Francophone Africa, British colonies encouraged domestic economic management and closer integration into global financial markets, which contributed to stronger institutional development in some countries. Today, UK firms maintain large investments in energy, telecommunications, and consumer goods sectors, often leveraging historical ties and language connections to facilitate business. Additionally, the UK government supports trade and investment through various bilateral agreements and aid programs, emphasizing private sector growth and entrepreneurship. This influence fosters relatively diversified economies with strong international linkages. However, challenges such as uneven development and reliance on commodity exports persist, showing that colonial legacies continue to shape economic trajectories differently across the continent.
We shall be diving deep into the cost of Brexit for the continent of Africa. We shall explore this from the strategic point of view and also from geopolitical and economic operation aspect. The United Kingdom will have free rein to set its own terms when dealing with countries in Africa. So far, the British government seems to be determined to foster close ties with the continent through foreign direct investment and private sector partnership.
Investment trends by the United Arab Emirates, India, and other Asian countries. In recent years, emerging economies such as the United Arab Emirates, India, and other Asian nations have ramped up involvement in Africa's investment landscape. The UAE focuses heavily on logistics, real estate, energy, and infrastructure projects, benefiting from geographic proximity and strategic port investments in East and West Africa. Indian investors emphasize pharmaceuticals, technology, agriculture, and manufacturing, capitalizing on shared historical ties and growing market demand. These countries often engage through public-private partnerships and regional trade agreements, highlighting a more diversified approach compared to traditional resource extraction. Other Asian nations, including South Korea and Malaysia, are increasingly active in telecommunications, automotive assembly, and renewable energy projects. This surge reflects Africa's expanding consumer base and infrastructural needs, aligned with the growing economic influence of Asia globally. Such investments contribute to technological transfer, employment, and industrial development, offering African economies alternative partnerships beyond traditional Western and Chinese investors. The trend signals a broadening and evolving global stake in Africa's growth.
The UAE has become Africa's leading investor, pouring billions into renewable energy, infrastructure, and other critical sectors. While these investments are seen as a boost for Africa's development, concerns over labor rights and environmental standards remain.
Key sectors attracting foreign investment: energy, mining, infrastructure, telecom. Africa's foreign investment hotspots revolve around critical sectors driving economic transformation. The energy sector attracts investments in both traditional resources like oil and gas and rapid growth areas such as renewable energy, including solar and wind projects, crucial for addressing power deficits. Mining remains a dominant sector due to Africa's vast reserves of minerals like cobalt, gold, and diamonds, drawing multinational corporations aiming to meet global demand. Investments target not only extraction but also processing facilities to add local value. Meanwhile, infrastructure projects, roads, ports, railways constitute essential enablers for trade and industrial growth and often receive significant backing from foreign investors and governments. The telecommunications industry represents a burgeoning field with rapid expansion of mobile networks and internet connectivity transforming business and social interactions. Foreign capital inflows drive technological upgrades and market expansion, making these sectors pillars of Africa's economic modernization. Their development enhances job creation, regional integration, and long-term sustainability.
The United Arab Emirates has emerged as a leading investor in Africa, committing $110 billion between 2019 and 2023, including a $72 billion for renewable energy, surpassing investments from the UK, France, and China.
Largest investment projects and their locations. Africa's largest investment projects focus heavily on renewable energy, infrastructure, and mining. For instance, Egypt hosts multi-billion-dollar green hydrogen and ammonia facilities in the Suez Economic Zone, reflecting its strategic role in energy exports. South Africa features extensive solar parks and wind farms, supporting its renewable transition. Meanwhile, major infrastructure developments include railway lines connecting mineral-rich regions, like the Zambia-Angola Railway linking mines to ports, boosting trade efficiency. Morocco's wind and solar projects also attract significant capital, underpinning North Africa's leadership in clean energy investment. Collectively, these projects represent billions in capital, aiming to modernize energy supply, enhance regional connectivity, and position Africa as a future supplier of green products and critical minerals. Such strategic investments are distributed across regions, but cluster around economic hubs, reinforcing continental growth priorities.
Promising job preservation and investments. Some projects face uncertainties such as a $34 billion green hydrogen project in Mauritania and delays in a $2 billion solar initiative in Zambia.
Impact of foreign direct investment on local economies. Foreign direct investment in Africa plays a critical role in economic growth through job creation, technology transfer, and infrastructure development. Investments in sectors like renewable energy or telecommunications help bridge infrastructure gaps, improving productivity and connectivity. FDI creates employment opportunities both directly at project sites and indirectly through supply chains and services. Access to capital and expertise from foreign firms upgrades local industries, fostering innovation and competitiveness. Additionally, FDI can stimulate domestic markets by increasing consumer incomes and government revenues, which in turn fund social services. However, benefits rely on effective policies ensuring that investments align with national development goals, support skills development, and promote environmental sustainability. When managed well, FDI helps diversify economies, reduce poverty, and build resilience against global economic shocks.
Our next stops are in Central Africa, where MEGA has partnered with an innovative off-grid energy access company called Bbox.
Controversies and challenges associated with foreign investment. Foreign investment in Africa encounters controversies related to environmental concerns, labor rights, and economic sovereignty. Some projects, particularly in mining and infrastructure, face criticism for displacing communities and harming ecosystems. There are fears that foreign companies prioritize profit over local welfare, sometimes exploiting cheap labor without adequate social protections. Additionally, economic dependency can reinforce inequalities where profits are repatriated rather than reinvested locally. Regulatory challenges, including corruption and unclear land rights, complicate investment outcomes. Political instability and policy unpredictability may also deter long-term commitments. These issues often spark public protests and call for stronger governance frameworks. Addressing these challenges demands transparency, robust environmental and social standards, and inclusive growth policies to ensure foreign investment benefits broader populations and respects local rights and priorities.
Fortement affecté le taux d'occupation de nos hôtels, pas nos hôtels Ibis Dakar seulement, mais dans tous les hôtels du Sénégal, beaucoup d'hôtels sont restés fermés et même présentement ils ouvrent difficilement. Et pour l'instant, l'occupation n'est pas encore ce qu'on attendait.
The future landscape of Africa's foreign investment. Africa's investment future is set to diversify and accelerate, driven by rising digital economies, green energy, and regional integration under AFCFTA. Renewables, technology, and sustainable infrastructure will attract increasing global capital as climate goals and urbanization pressures mount. Emerging investors from the Middle East and Asia will complement traditional Western and Chinese partners, broadening funding sources. Digitization will unlock new opportunities in fintech, e-commerce, and health tech, expanding investment beyond natural resources. However, success depends on addressing governance reforms, improving infrastructure, and enhancing workforce skills. Africa's growing middle class and large young population offer significant market potential, making the continent a dynamic frontier for innovation and long-term growth. Policymakers and investors are embracing more strategic, inclusive, and sustainable approaches to maximize mutual benefits. Thanks for watching. If you learned something new, hit like and subscribe for more deep dives into Africa's economic story. Got thoughts or questions about foreign investment? Drop them in the comments. We'd love to hear from you. See you in the next video.